Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's have a look on the euro currency. So in weekend we talked a lot about really tricky situation euro and euro, dealing with this performance. I just do not want to repeat all the things that we have said. It was a really long video where we explain everything. Just let's keep going with this analysis. So the conclusion was that until market stands below predefined fib levels on the intraday charts, initially we are falling to the bearish context, because formally the weekly double repo pattern that we have, it hasn't confirmed yet, because we haven't got the second close below the 3x3 moving average. Potentially risk exists that it might be a double repo look-alike pattern, but for now, based on the behavior, and we also have chosen a few indicators on the different markets that we could compare to the performance on euro and make some conclusions. And all these indicators currently do not contradict the bearish background. First of all, even on the daily chart, Monday's open was below the market. Price just has closed the gap and returned it back down. Here we do not see anything really bullish and no change in the sentiment by far. On the cross-market analysis, if you take a look at the dollar index, it is moving higher. Yes, bearish grabbers that we have here are still valid, they are not cancelled, but in recent few sessions we have the small but bullish action. On the 10-year bonds, we also see starting of the jump of the yields, and here is also, you can see that kept opening on the 10-year bonds back to the 4.5 area. Maybe this is not decisive factors for performance on the euro right now, but they obviously, for intraday trading, there are the headwinds for euro currency. We need to take into consideration, particularly speaking here, this performance on the 10-year bonds indicates some problems that the United States have met recently. So in fact, they have too much borrowing in the bills, very short-term papers, but particular bills are treated by the market as least risky papers, and they are mostly used for different collaterals, for short-term repos and so on. If the amount of the bills will start decreasing, the 10-year bonds, especially after subprime mortgage crisis, now not treating as absolutely safe. And obviously, when the amount of the bills start decreasing, investors turning to the longer-term bonds, they will demand higher premium for risk, and that's particularly might explain why we see here this action. Anyway, this makes some bearish pressure on performance on the euro. On the euro itself, we also do not see something really bullish. So take a look what has happened. We said that probably this might be some 30% retracement on the beginning of the week, because we have got this triple two, but we have to control the levels. They will show you on the hourly chart. You probably know about them. We talked about this already. So until market stands below it, we keep the bearish pattern. So we initially intend to use this pullback for possible taking the short position. But you can see that the pullback was really small, so just 30% minus target of the triple two has been done, but that's over since then. And on the hourly chart now, since we see here on the downside A, B, C, D pattern, the CDB, the acceleration, I suggest that we today or tomorrow we could get something of this kind. Since the CD leg shows acceleration, reaction on the 618 support was very slow, and actually this was the agreement support. So this A, B, C, D, OP target accompanied with the 618 level. I suspect that market is going to the XOP, which is 102.65 approximately. This is XOP extension, and it also might be completed by the butterfly shape. I do not know, maybe after that there will be some reaction. But at the same time, if market hasn't shown any reaction from the combination, of the target here with the OP, which is actually was here, and 600 support. Why it should show any reaction from the just single standing extension target without any fib levels? So this is the answer that we have to. This is a question that we have to answer. Maybe if it will be even not the reaction that we are watching for. So currently, in 2 words speaking, market keeps the bullish context. Finally, if you remember, we also said that you could control the situation by looking at the cable performance. And now, if you take a look at the British pound on the 4 time frame chart, you could see what has happened. So we said keep on 24, 23.80. Downside breakout tells you that this minor pattern is failing, and which means drop below these lows, and as a nested doll, bearish pattern will be failure of the big hand shorts as well. Currently, everything goes in this way. So this put the shadow on the perspective of the euro currency as well. Yes, they are different, it's not the same, but this definitely some correlation exists, and that's performance against the dollar of the cable. You can see what is going on here. So correspondingly, in the current situation, I wouldn't consider taking any new longs position on the euro currency for now. So if you intend to take the short position in the current circumstances, because we do not know definitely from which point market will show the pullback, or maybe it will not show it, because we've got only the 30% retracement here. If you haven't taken position here, of course, since we do not know exactly what the price shape will be, maybe it makes sense to split the position. Take the minor part somewhere, so for example, even right here. When the market dropped to the target of the butterfly, you could move stops to the break-even and see what will happen. If indeed big retracement starts, you will re-enter better level. No retracement will happen, market start dropping low, that's great, you already have some position. You could add more if you would like to. So something of this kind. But the major conclusion from the current performance is that I do not see any bullish signs for euro currency for now. It's taking us all together. Performance dollar index, 10-year bond, Great British pound, euro itself suggests that probably chances on downward action seems better than the possible some occasional reversal. So now all eyes will be on the CPI report today, this week, United States, and probably it could also bring some volatility on the market because inflationary expectations right now are rising. So let's see what will happen.